Hey, hello everyone. On this video today, I'm going to make a new layout available to you, but I'm also going to show you how the process that we go through every morning to figure out which way we think the market's going to go for the day, up or down. So there's a process of reading the right indicators to tell you overall what the market will do. In the $1 Million Margin Club, which is what I'm showing is representing, we pretty much trade large cap stocks over 25 billion. Those are the stocks that move the market. So if we know the direction of the whole market, then we can feel comfortable if we get stuck in a position by averaging up or averaging down, whether we're going short or long, thinking that maybe we'll hang on to a little bit longer because it's supposed to go, the market's supposed to go a certain way based on our research. So it gives us a little bit more confidence to hold the position. But I would suggest you just follow your trading plan for max loss, even though we all don't do that all the time, but that's the safer way. And then just get back in as soon as you see, everything line up again to get back in. I'm going to also show you, besides going over all those indicators with you and exactly how we do it, I'm also going to show you the scanner that we use to find the $1 Million Margin stocks, so the MMC. So I'm going to just drag that over right now. This is on demand. I'm on a Saturday. So I'm going to put this in here. By the way, if you like what you see and I'll make all this content available, please remember to give me a thumbs up and subscribe. And I will be continuing to make a lot of videos about particularly how the MMC trades, but a lot more too. So this is how we set up our scanners. Now this won't be on the same day because this is on demand, and this is not that you can't put a scanner on demand, unfortunately. But so we have under market cap 25,000 million, which is 25 billion. That's the minimum. You don't have to have a maximum. And I do have a video that shows you how to set up scanners. So you should find that on my channel. And then the ATR, we have the input length at 2, meaning it's set for 2 days back, right? And then the maximum price in dollars for a stock is 250, all right? And then the ATR, the most important thing, the minimum range is 6, meaning it's going to move a minimum of $6 up and down. So what this scanner is doing, and we have 10, we have it sorted by volume, right, descending. So you don't really need the volume thing set up because you're going to go for the higher volume stocks. Now, we don't always trade Tesla because Tesla is just a little too volatile, even for what we want. But what we're looking for, again, I'll go over it in the $1 Million Margin Club, is we're looking for stocks that move a lot like momentum stocks, but slower. So they have that range where you can make a lot of money, but you're not going to get stuck in a quick flush. They won't flush quite as quickly, so you have more time. The analogy is they move more like an RV than a sports car, and they can be traded. And we're typically trading 2,500 to 10,000 shares, but you can trade 50 shares and 100 shares, and it works just as well. And we usually don't trade for more than an hour, but in 15 minutes, I think on the video that I have, in 15 minutes, I made $20,000. And that's a large share size, obviously. But, you could make 200, 500 if you're just trying to right around the 25K PDT. That gives you 100,000 to margin. So you too, even though these are expensive, more expensive stocks, you are able to get a good share size to make some money. So this is how the scanner's set up. Let me get that out of the way. And now here's the overall layout that we have. Now this layout I'm going to be making available to you again, as I always do in my videos, as well as the scanner settings I will make available to you as also. So just quickly what you're looking at here, this is a 1 minute with the grid. This is the seller's indicator. This is the enhanced volume. Down here is a day chart that I open up, I pop open. I'm about to go over all these in just a second because this is how we decide which way the market's going to go. Have a time and sales over here. You have a 15-minute and a 1 hour here, and then you have the level 2, and then the active trader, and then a 5-minute chart, and then the ADX trend, which is really helpful, and the RSI, and then I have the dailies set in here as well. So, and this has the candle volumes and everything. So there's a lot of really cool stuff on here. So when you download it, remember to download all these custom scripts that I've done first. And then download the whole layout, and then it will populate correctly because it doesn't move custom scripts. You'd have to put them in individually. All right, so let me go right on to how we judge. So every morning, besides looking at a stock calendar to see what events are being announced, so obviously news announced, any catalysts is important that might affect the overall market, which there's a lot of these days. And then we also go on and check our stock ratings of the stocks that we might trade, or after we run the scanner, we're going to check the ratings of those stocks. And there's many different ways you can do that, so I'm not going to go into that. We'll even look at CNBC and see, hey, what's the overall market doing on that? Although I wouldn't, use that as your only source. And then we often make watch lists and we compare besides all the scanners. So we do all that. You don't necessarily have to do all that. The more you are prepared, though, is the better. But let's start with what these are down here. So these are the different things that really are going to judge which way the market's going to go in combination, right? So the QQQ, the 100 tech stocks, you're going to make a quick assessment. Now I have this marked out. So you're looking for gapping, which means that if it passes this level right here, it's got a long way before anything slows it down, most likely. You're also looking for, we mark it out. I mark it out with trend lines. You see it gets a little busy. But, I've marked, trend lines that go up that possibly are ascending resistance and then descending support. In this case, they're beyond both of them here. And then I mark the gapping, like what happens in the post and pre-market. If there's a big gap, you're going to want to mark those off, and from when the day closes and then opens the next day, sometimes there's a big gap. That's usually when you're marking those gaps. So as you can see, this is pretty well marked out. So if I was going to look at this one, just the QQQ, and decide which way I thought they were going to go, which is the 100 tech stocks, I would say they're trending up. It says a new trending up down here on the ADX. So this is my first positive sign that I probably want to go in a long position here, right? And if it breaks through this line, then, sky's the limit here. It might just take off. It might bounce back here. It might just stay in here. But generally, it looks like it's going to go up. That's the first indicator. So I would mark that down. Number one, looks like it's going up. So double click. Now we're going to open up the SQQQ, and we're going to take a look at that. So the SQQQ looks like right now, I don't have that marked out, but the SQQQ is going down, which means the market's going up, right? Because that's the short stock opposite of the TQQQ, which is a derivative. These are derivatives of the QQQ, which I was just looking at, as you might know that. So if this is going down, that means the market's going up and a new downtrend forming with the ADX. So it's basically telling me that it's going down, which means now two indicators that the market's going to go up today. All right, then we go here to the SPY. And this is going to be marked out, much like I did the QQQ. So I've got the price levels marked out. I've got the gapping marked out. And right now in the position that we're in, we're like right here. So let's get a closer look at it. So right now we're in the middle of a big opening here. So it's hit some support here, and it looks like we're wide open. There's not really a trend on the SPY. The ADX is saying, but overall though, it looks like it's on the way up from a dip. It's coming back up. So you might get some, actually I'm surprised I don't have a line right there. You might get some resistance right there, but it's not really that good of a trend there. But I would probably watch that line too, just in case. But it looks like you've got a wide opening from gap-wise. This is just a resistance, not a gap line. So, so anyway, again, this is going up. So now we have three indicators that they're going up. All right, so now you have the UVXY, which is the fear index, you might know. And there's not, the fear is going down, so people don't have a lot of fear. I guess that's the easiest way to put it. So that means the market's going to probably go up. So confidence is high right now. So another indicator. So now we have another one. And now we're going to go over the TLT. The TLT is the bond index, the 20-year Treasury bond. So let's open that up. So basically, now the weird thing about why am I looking at bonds? Well, typically when the market goes up, right, then bonds go down. There's less money going into bonds than into securities. But if the bonds go up, then typically the stocks go down. Now this year, after the pandemic and everything else that's going on, that has not been surely the case at all. So, I look at this kind of with a grain of salt. It doesn't give me as much as what it used to give me, But it's kind of showing you what I expect, though. It's almost just consolidating right here. So this isn't telling me much, but it's not telling me to beware either. So far, all signs are we're gonna go long today. And then the tick is an interesting thing. So this is basically set on a 1 minute, and this is the NYSE 2800 stocks. So anything below 500 on this is out of average. So here it is, and you look at this and you're like, wow, if that's somebody's heart, then they're in trouble, you know, but it looks crazy, right? So this is the mean line we're looking at, right? And you can see the range here, 400, 500's about right there, 500's down here. So this is saying that we're going up, right? Because we're above the 500, so there's more here saying if we're above this line, and we're also above the 500 to 500 is kind of more average. So there's been a lot of spiking above this. Market's going up, you know, generally. Now, this is on a 1 minute, but still, it's generally going up overall here lately since the open of the market. So, of the close of the last market. So now we have all the indicators that say this stock this day is going to go up. So we would be trading very long bias today. All of us would be. And again, I'll go over why it's so important to know that. I mean, it's not how you trade the individual stock, obviously. This isn't helping us with that just when we get in. You know, getting all these to line up and reading all this like I have in some of my other videos, that's far more important for the individual scalp that you're doing. It's more along the line of we're going to be long biased, which is based on all these readings, assuming there isn't a big catalyst, a big announcement coming out, you know, then you have to beware because that whole day is thrown off. Fridays are going to be thrown off a little bit, right, because of the options calls and stuff. So, you know, basically, that's how you decide. But why it's so important again is when you're in a position and it's not going the way. Like say I went into a long and it started to go down, and then I averaged my position down. So I have more shares now, but they're less, you know, they're on a better price point because I'm more confident it's going to bounce back, even when it went beyond my little channel that I've created, right? And then I do it again because it keeps going down. And I'm like, oh boy, you know, but overall, the market's going to go up. So I'm feeling safer. It doesn't work all the time, of course, but, you know, I'm feeling safer to add to it. And there's at some point, of course, if it keeps going down, you have to, that's it. You got to cut your losses and get out. But it is helpful to know, are you going to go long today or are you going to go short today? And if you get in that position where you kind of got stuck and called the position wrong, and of course, as soon as you sell it, that's when it goes up, you know, but we all know that feeling, right? But that it really helps a lot knowing overall how we're going to trade the whole day. So that's basically our strategy going in. And I'm going to make another video about how we actually trade in the channel. We normally don't start until after 10:15 to 10:30 when the stocks that we are trading are really starting to consolidate. They've got that up and down movement, but they're starting to consolidate. So it's really helpful. Then you can mark out a channel, high and low, and you're just kind of going in and out of that channel when they start to consolidate. I'll give you an example over here. Like this is a 5 minute. So I'd go over here to this high of this candle and I'd mark it, and then I'd go down probably like about right there, right to this one. And I'd say like, look, it seems to be staying in here, but it's not set long enough yet to tell me for sure. But I mean, this looks like the channel, right? So it can deviate, but you know, on a large stock. Now Tesla's not a great example because they go wild, but with some of the other ones that we would trade, Apple, Nvidia, you know, AMD, I think was one of the other ones that was up over here. Meta, you know, they're going to move big moves, but slow, and you're going to be able to get a channel. And then when it deviates, you reset, you make a new channel wherever it might. If it comes up here, then you're suddenly waiting for it to slow down again, and then you kind of do the same moves. Very effective way of trading, believe it or not. Just get in and out pretty quickly within a minute, 2 minutes, 3 minutes, depending. You try to get, if this was up here, I'd be buying down here, right? I'd be buying, but watching, watching to get ready to cut it so that it would come back up. And then as it got closer, I'd be shorting, and then that's how we trade. And it's that simple. And when you know the general sentiment of the market and you know the way that your stock, your RV stock is moving, it's pretty safe. It's pretty comfortable, but make trading rules. Guys, I hope that was helpful. Remember, just go down where it says show more here and you can copy all these things. And if you remember to subscribe and give me a thumbs up, that'd be very helpful. All right, I'll see you out there trading, guys. Good luck.